Your morning mover is Boeing. The stock is down almost 4% in the pre-market this morning. The breaking news, the machinist union overwhelmingly rejecting a new labor contract. More than 30,000 Boeing workers walking out just after midnight Pacific time, halting production of the most popular jet, that is the 737 MAX. Now, this is expected to be another costly blow as the company is trying to increase output, improve the reputation. More than 94% of workers in the Seattle area and Oregon voting against the agreement that Boeing and the union chiefs, the International Association of Machinists and Aerospace Workers, agreed on Sunday. 96% of workers voting in favor of the strike, far more than the 2/3 vote required for a work stoppage. The stock 37% down year to date. Let's bring in for a reaction Fitz-Gerald Group Principal Keith Fitz-Gerald. Keith, I want to get your take this morning on this breaking news.
Well, I tell you what, this is right in our backyard. Obviously, the scuttlebutt has been that they've dug in. I think it's very short-sighted. This reminds me of Chrysler. And what these machinists have got to realize is they may not have a job if they continue to pull on the company.
Well, and look, Rebecca, the other point of this is that they have to deliver the jet to get 60% of the revenue of the sale per plane. And this is a company that has already been criticized each quarter for missing production targets or having lowered production targets. Now they have no production.
I mean, this is really awful, Cheryl, because, ever since Boeing basically had the problem with the MAX jet years ago, we've seen problems just since the last 2 years. We've seen a lot of mechanical problems. That has obviously been testified about before Congress. And so now, to Keith's point, now you've got machinists going on strike, but they're not understanding that their company is already financially and fiscally at a really critical and crisis point. And this is our only American plane manufacturer. We cannot see Boeing go under. So we've got to do something about this.
And it is a Dow component. It is certainly a stock to watch throughout the day. Right now, you do have Dow futures up 82, but that's despite the drag on the Dow that is coming from Boeing. Let's take a look at futures in general. Here you've got Dow up 79, NASDAQ is up 14, S&P up 12. All right, so the rally for the week. Adding more than $1.3 trillion to the S&P 500. We've been green across the board for the year so far, Keith. So give us your outlook at this point in time. We're going to talk about the Fed in a second. But the longer-term trend seems to be positive for the markets.
Well, that's our belief, and as hard as it is to come to terms with, if you're sitting at home and your wallet's pinched and you're struggling, your job's, everything else, is the path of least resistance is still higher. We've got inflation coming down. The data may not reflect it yet. We've got stronger earnings, particularly from key, good, solid companies. And we've got the political elections coming up, which are going to give some impetus to the market. So I'm still at 57, 51, 51 for the S&P 500, which is a ways to go from here. But that's what we think is coming our way.
All right. Well, good. Well, let's talk about another big story that happened out of Washington yesterday. You had senior Biden administration officials meeting with key leaders in the AI industry. They discussed the development of data centers for these companies. They talked about energy, in particular. OpenAI CEO Sam Altman was there. Google President Ruth Porat was there. The big concern for investors when this meeting was first announced is was there going to be more talk about regulation and any further stifling of AI as the Chinese try to take over the AI space from the United States?
Well, what's the most dangerous words in the English language? We're from the government. We're here to help. This is a double-edged sword. Now the government knows about AI and they know about energy, and now the government knows about AI and they know about energy. So, as an investor, this is both good and bad. So you've got to pick your companies carefully. Not all tech is the same, but at least there's a dawning recognition inside the Beltway. A, how strategically critical this is to our country, and B, that our resources are not where they need to be if we're going to power this revolution and lead the charge.
Let's talk about the Fed, as promised. First, we'll pull up the 10-year Treasury yield this morning ahead of the meeting next week, Tuesday and Wednesday. We get that decision Wednesday. The Wall Street Journal's Nick Timrose writes that the Fed has a rate cut dilemma of whether to start big or small. They say that, quote, they are nervous, he says, they are nervous about keeping interest rates too high for too long amid evidence that higher borrowing costs are working as intended to slow inflation by cooling spending, investment, and hiring. Keith, there is mounting criticism that the Fed is lagging behind the rest of the world. The ECB cut rates for a second time yesterday, and the Fed has not done one cut.
Well, I tell you what, I've been in the position for a long time. The Fed has already caused the next 3 financial crises. I don't think they would understand a rate cut if they had to, because they don't know how real money works. I'm of the opinion, actually, there's still an outside chance they do nothing except jawbone it to death. Personally, I think they ought to be half a point, get it on the table, get the economy moving. Millions of people are struggling because of their policies. And if they don't recognize that, then why do we even have a Fed?
All right, Keith, I want to get Rebecca's take on this because you and I have talked again a lot about this Fed meeting and this cut. I mean, look, a jumbo cut, there are still some that are calling for that half a point.
Yeah, I know, but to Keith's point, I know he wants it, but I believe that if they come in at a half a point with you, the PPI that we got yesterday and the CPI that we got on Wednesday, which is still hot and still sticky, that tells us that the Fed has data that we don't have that makes it look worse. Yeah, something's wrong if we go with a 50 basis point, in my opinion.
Yeah, and that would, again, rattle the markets, which is the big concern we keep hearing from many. All right, Keith Fitz-Gerald. Keith, it's great to see you this Friday. Thank you.
Thank you.
All right, we've got a